One of the things that's often joked about, there's two countries that have the most extensive legislation in the world in tax. One is the UK and the other is India. And one has almost 1 billion in population versus the UK. So I think that goes some way into kind of talking about the complexities of just taxation. I think in the international arena, yes, it's complex, I think, and it has been for a number of years, and obviously with different countries having their own domestic regimes, I think that just adds to the complexity. But one thing I'll probably stress is that actually, when we're speaking to clients, especially international clients or any clients for that matter, even though we're tax advisors, tax actually isn't the first thing on the agenda.
Welcome back to the hot seat. Delighted today to be joined by Majid Hussain, who's a partner at Smith & Williamson in London. Welcome, Majid.
Hi, David. Great to be here.
Absolutely. So for PCD members who've not met you before, Majid, why don't you explain a little bit about what you do in the tax world?
Absolutely. Well, look, David, as you said, I'm a private client tax partner at Smith & Williamson. I've always done private client tax. I primarily focus on international clients around residency, non-doms. I've got a nuance towards private equity executives, so just focusing on the taxation of carried interest, co-investment. And over the last few years, I've had a real focus and a real push on the Middle East. So I've spent a lot of time in the region and just working with families and advisors out there and just generally advising Middle Eastern families with potential tax issues that arise and just general wider structuring as well.
Okay, perfect. I mean, the international tax space is a very complex environment. There's lots of different specialists focused on different areas, whether it's from certain service lines or jurisdictions. I mean, how do you see the complexity of the tax code increasing in the UK, what that means for advisors and how they approach their advice with clients?
David, absolutely. I mean, one of the things that's often joked about, there's two countries that have the most extensive legislation in the world in tax. One is the UK and the other is India. And one has almost 1 billion in population versus the UK. So I think that goes some way into kind of talking about the complexities of just taxation. I think in the international arena, yes, it's complex, I think, and it has been for a number of years. And obviously with different countries having their own domestic regimes, I think that just adds to the complexity. But one thing I'll probably stress is that actually, when we're speaking to clients, especially international clients or any clients for that matter, even though we're tax advisors, tax actually isn't the first thing on the agenda. We generally just speak to clients about what their objectives are, what are their needs. And then I think that segues into the wider discussion around succession, asset protection, etc. And I think that's where the focus comes, and tax effectively just is an add-on. And I would say that's the same in terms of residency. I mean, I don't think I've ever met a client or ever advised a client to leave the UK because of tax. There has to be wider commercial factors, and tax just forms part of that overall decision-making process.
Because if someone's deciding to relocate purely for tax, the likelihood of that planning being successful in the long term, if it's not part of a broader lifestyle, is limited, isn't it? I mean, often it has to go hand in hand. The tax trade is only part of the picture. Is that right? Particularly in the case of, say, relocation.
Absolutely, David. I mean, look, I think if the clients ever go, I mean, we've had clients where we've said to them that you need to go out and you need to even test the jurisdiction before you live there for the long term. And if people are going for tax, the chances are it's going to fail. That can't be the overriding motivation. And equally, as part of our advice, we will say to clients, look, find a location, find a jurisdiction. There has to be a lifestyle purpose, a reason as to why you're going. And those tend to be more successful. Those clients enjoy that location more, and also there's more that they do. It could be business interests, it could be commercial family interests, and that's what the driving force is.
Do you think also that bringing the focus to more holistic view means that if there is a change in the tax code, which you can't predict going into the future, the planning still contains real value for clients because it helps them map out how assets will pass or the bigger picture of their wealth. So it's not all loaded onto a single piece of tax planning that could be changed in the future. Does that help increase the value of advice for clients?
Absolutely. I mean, when we're advising clients, the term that you use, holistic, is the overriding piece. I mean, when we are dealing with clients, we're looking at multi-generational families. We're thinking about lifestyle events, marriage, divorce. I mean, even those things, we have realistic discussions with clients. asset protection. I mean, a number of times we're talking about very wealthy families, and leaving it just doesn't even make commercial sense or social or moral sense just to leave vast amounts of money, to the next very young next generation. There is that wider piece about actually, what are you trying to achieve? What is the long-term aim for you as an individual, for your children, for subsequent generations, and all those other factors that come into play in terms of perhaps helping people with businesses in the future, school fees, etc. And as you say, if we've had all those considerations and the structuring is around that holistic piece, then you're absolutely right. If tax changes, you still don't lose the value of what the fundamental structure you put around has.
I mean, a huge amount has been written about the great wealth transfer, next gens coming through with different priorities to the previous generation. I mean, in the sort of tax and wealth structuring space, do you think that next gens are characterized correctly in terms of being different from the previous generation, having certain characteristics, or is it a bit of a cliche to try and create catch-all group? What's your experience of, next gen clients, their priorities, and how they fit into planning that you might be doing with the parental generation?
I mean, David, as a tax advisor, we always say, look, any advice, any individual is bespoke, and I'm not going to deviate from that line. But actually, there are key differences between generations, and just to give you an example, especially from the Middle Eastern region, you can see a clear generational divide between, say, the patriarch, the matriarch, and the subsequent generations. And that's even in terms of the level of international connections that the younger generation have. They might have studied in the US and the UK, so that gives them a slightly different outlook. And then also the type of areas that they have focus on. There's a real key interest in the Middle East, especially amongst the younger generation, to focus on startups and investing in tech. Whereas traditionally, the patriarchs, they focus on, say, real estate investment, those type of, very solid bricks mortar type investments. But there's a real change in terms of what the younger generation are looking at. And equally, I think we're seeing more of a focus in terms of philanthropy, a real focus on kind of social, environmental impact. All of these points are forming, I think, more and more of the discussions we're having, especially with the younger generation.
Okay, interesting. I mean, an interesting and complex type of professional in the UK that you might advise is in the private equity sector. So they've got, the opportunity to create great wealth in the UK. They might have other considerations, other cross-border considerations and planning opportunities. I mean, how do you approach clients in that sector to give them that valuable advice?
So with private equity executives, I think they're a and they'll forgive me for saying this, they're a beast in themselves, in the sense that you've got effectively people that I would say are very time poor. They're in a very fast-paced industry, and one actually, and I'll probably say unfairly targeted sometimes. I mean, private equity plays a huge part in UK investment, in businesses in the UK, and a key driver in the economy. And the conversations we have with private equity executives, I think, are relatively unique. I mean, they have a particular lifestyle in terms of how they start out relatively as graduates. They're working in an industry that is very fast paced, and they might not always have time to consider actually, they will accumulate a lot of wealth in a very short amount of time. And for them, that discussion really, centers around all those, factoring in all those key lifestyle events. When we meet those clients, they might not yet be married, they might not yet have children, and all of that is going to play a key part in what we talk to them about. And equally, their normal industry might be slightly risky. So in terms of their personal wealth, they might look to be a bit more stable and a bit more steady in that respect. And equally, some of the discussions we have with them are around philanthropy. They're going to accumulate a lot of wealth. They really want to benefit others. There's a real kind of a charitable element to a lot of private equity executives that I speak to, and a real wish to help the young generation, help startups. They're really kind of moving in that entrepreneurial spirit.
Interesting. And I guess London is still a magnet in the private equity industry for people from all around the world, but a lot from the US or others who come, move to the country and are, non-dom or have special tax status that can be considered. I imagine the US side is also something that crops up very, very frequently with these with this class of professional.
Yeah, absolutely. I mean, with private equity executives, they have all those complications that we spoke about before. The fact that international, the fact that they could be non-dom. They then also have an additional complexity that the way that private equity returns are taxed. So carried interest, co-investment, disguised investment management fees. I mean, there's a plethora of tax law that just targets private equity executives' returns. So they really have a hard time from just a reporting perspective. And then, as you say, David, if you throw in the international and the US factor, that just brings an additional layer of complexity. So there's a lot that those clients need to think about, and there's a lot that we have to think about as advisors when we're speaking to private equity executives.
Okay, and we're over now, well over 12 months into this pandemic, into this new environment. Have you found in your conversations around succession planning there being a shift in focus? In the early days of the pandemic, people were talking about how they can do planning in a reactive way. We went through that phase. People went into a more reflective phase. Now, as we're merging out of lockdown, how do you see the way that business owners, wealth creators are viewing succession planning?
I mean, there's no denying the last 12 to 14 months have been, it's been incredible for everyone. It's been incredible for clients. It's been incredible for advisors. I think when this was completely brand new to all of us, I think the first 3 months of lockdown was completely strange. I think a lot of people were worried. But in answering your question, has it changed behavior? I think the answer is an overwhelming yes. I mean, we have got clients, thinking about things that they're probably, kind of put at the back of at the bottom of the drawer, wasn't at the forefront of their mind. I mean, such as succession, even things like residency. We've had clients that have been stuck in just one jurisdiction and actually really reflected and thought about actually, where do I actually really want to live? What's the motivation? And whether that's, domestic moves, like clients moving out the city into the countryside, or clients actually changing the entire, going to another country. That's been really topical, though we've had a number of discussions around that. And then the other real key, I think, behavioural change has been around succession planning. I mean, clients have really been thinking about actually, look, what are the next steps? I mean, what safeguards do I have in place if something was to happen to me, to my family? And that's really been a really interesting conversation with clients and clients that are a lot younger than we would ordinarily have those discussions with. So I think the pandemic's definitely had a shift in mindset.
Okay, and as you mentioned there, I mean, residency is a major point, and as we're coming to open up now, many people have been planning and reflecting on this period where they've been in one location. And where do you think that some of the key demand, I guess, for UK relocation is coming from? There's a lot of reported in the press about interest from Hong Kong and China. The Middle East has been a strong, source of interest. Where do you see the main regions creating demand for relocation, for example, into the UK?
David, I would say all the ones that you mentioned. I think the Middle East we're seeing. I mean, the UK has always been a place of investment for the Middle East region. I think that's always stood. It's always kind of been there throughout time. What I would say in particular, what we're seeing now is more the younger generation in that region are actually looking to relocate, perhaps for work, for study, and stay on in the UK than they ordinarily would have. So that, I think, is a key kind of area. As you say, Hong Kong, places like that, whether it's political reasons or, again, investment, UK real estate is really attractive for the Far East, and we've seen movement from there. A lot of people are looking for political stability. They're looking for legal stability, and those factors have always been truth. Have always been central in people coming to the UK to do business. And I think they stay true now in terms of clients or individuals have seen a real change in terms of the international political market internationally because of the pandemic, and they're actually looking for those type of stable jurisdictions. And the UK remains, I think, very attractive in that regard.
And education is a strong draw, isn't it? I mean, it's got to be one of our primary sort of exports, really, in that sense, because it does draw in wealth and talent from around the world. How do you see education as a sort of pillar of what we do here?
Yes, I mean, both. I'd have to say both the US and the UK are always at the top of a family's list when they're talking about their children and they're talking about education. I mean, one of the interesting things is we're seeing a real, the expat community in the Middle East, that their children are looking to take an education in the US or the UK, and that forms part of discussions we have about residency. Parents who are retired are actually thinking, well, look, if our children are all studying here in the UK, why are we sitting in Dubai or Australia or the Far East? So they're getting up and relocating to the UK just to be closer to their children, and I expect that to be a trend that will continue, and in fact I think increase after the lockdown eases.
And I mean, what do you see in the Middle East in terms of wealth structuring trends? I mean, we've done quite a lot of content over the past few months involving advisors on the ground. And what strikes me is the innovation locally. So with DIFC and ADGM creating new structures for wealth planning, acknowledging trusts. And what comes across from the advisors locally is it's that mixture and partnerships with professionals elsewhere to kind of create strategies, family governance planning that's holistic in nature, that covers both local and international assets. Have you seen an increasing sort of sophistication of families locally and partnerships with advisors trying to pull together, those plans that can cover the family's assets, which can be complex and a mixture of local and international?
Absolutely. I think the Middle East region is somewhat unique in terms of when we're speaking to clients there's almost kind of two aspects when it comes to structuring. There's what I would say the domestic assets, domestic considerations they have, and Sharia plays a key part in that. And then there's the wider, more international piece. And actually, a point that you touched on, David, there's no one particular structure that fits all with these clients. I mean, we're seeing an increasing use of, say, trust structures, PTCs to help with succession planning. Equally, foundations are something that's very common in that region. But what I find very interesting now with clients there is that actually they really want to bring in members of the family to come in and work and be part of these structures. So be part of the PTC, be part of the governing board, really direct the direction of businesses, direction of where assets are going to be invested. And so that's a real change that I'm seeing in that region.
And are you seeing more use of, family charters, like documented strategies for family governance? What's your view on that?
I think family governance is definitely an increasing part of the work that we do, obviously working with other advisors in drawing up charters. I mean, now in the Middle East, we're talking about the third generation, so which involves a lot more family members, which means that and as you can imagine, no families agree on strategy necessarily. As I said, the younger generation have differing views from the older generation in terms of where they want the investments to be directed, even from a social environmental perspective. And to navigate all of that, family charters and governance is a real key part in terms of making sure that, rather before people fall out, that we've got a set of standards and set of governance that helps navigate those decisions. So they are forming a key part of the advice and the discussions that we have with clients.
And do you see like the professional services firms providing more Sharia compliant solutions, tailoring their services to the market? I mean, there's a lot of particularly in the investment world, products on sustainability and ESG, providing an overlay to a portfolio. Do you see there's increasing sophistication, I guess, tailoring on the financing side of solutions for Sharia considerations, more sophistication there from the
absolutely. I mean, with clients in any region that you come from, I think that there needs to be a level of understanding of the local culture, local practice, whether that's in the Middle East, whether that's in the Far East, whether that's even in South Asia. I work with a lot of high net worth clients in say India and Pakistan. Each of them have their own particular nuances, and Sharia forms part of that wider discussion. I think as a professional service advisor, we need to make sure we're staying up to date with all these with changes, making sure that we're in tune with our clients. And and from particularly clients from the Middle East, I think understanding Sharia finance, and not just understanding for Sharia finance, but also understanding the sensitivities around what Sharia means, and it means different things to different clients. And different clients kind of somewhat sit on a different parts of that spectrum. So in answer to your question, yes, it's something that I think professional services firms will pay more attention to, and I suspect invest more in that type of expertise.
Okay, well, it's been great talking to you today, Majid, and we look forward to sharing this discussion with our members.
Brilliant. David, it's a complete pleasure, and thank you for having me on.